Looks like we're live. Welcome to another lesson in personal finance. I'm Jim Munchback. I'll be your host, your instructor, your guide for the next few minutes. If you're watching on YouTube or Facebook, welcome. I'm going to jump over and get started in the Zoom room. We've got some folks to let come into the room. Boom. Welcome everyone who is joining by Zoom. Hope you had a great spring break. It was a good week to break, good spring break. Hey, if somebody in Zoom can give me a chat and just let me know that you can hear me, I would appreciate it. As always, if you'll chat in, thank you, Christian, I appreciate that. Also chat in your time of arrival. So can you see me, Christian? Can you see my screen also? I can see. Okay, good. I see my screen now up there too. Okay, cool. Let me get my iPad going. We're gonna do a couple of things today. Today is going to be a review of the insurance assignment. I got an email from a student this morning. Kind of surprised I only got one email. When we have spring break, it's it's always a challenge for me to get the timing right on the assignment. So you were supposed to have 1 week off from assignments, and so I'm not sure how I did it, but I put in the syllabus that the insurance assignment wasn't due until next week, the 28th. Put it in Blackboard, however, that it was due today. So for those of you who did your assignment already, congratulations. If you did it already, you will be entitled to get the extra 10 points. In fact, as we discussed, not last week because we didn't have class last week, but the week before, if you turn your assignment in, oh, it's not open on Blackboard. Oh yeah, no, assignment 9 is not. I will open that in a minute. Thank you, Christian, for letting me know that assignment 9 is not open. We will review or preview assignment 9, but first we're going to do a review of assignment 8. So thank you for that. If you go to missionalmoney.com, I posted this on the website, and it will also there'll be a link to this post in your YouTube video. So if you go to the playlist every week when I post the video, it has links to whatever I'm showing you on the screen. But there'll also be, this preview is also going to be posted in Money Study Group, so you will have in your possession what I have here. But yeah, I haven't posted the assignment for 9 yet. Sorry about that. I was working on assignment 8 because of the confusion on the due date. So that was my problem. I created the confusion. So again, if you were rushing to get the assignment done by today, you're welcome to make edits and resubmit it by Friday at 3 p.m. And if you do that, you will get the extra points. If you already turned in the assignment, you'll have until Tuesday to make any corrections and still get the extra points. So hopefully that's helpful. And if you waited and you haven't done it yet, the pressure's off. So that means we're going to have every week moving forward, all of the assignments will be due as they used to be. But we will have 1 week this week where technically you have no assignment due. But again, if you did already submit assignment number 8, that's what we're going to talk about first. Assignment number 8 is your auto and home insurance. Then if you've already submitted it, hopefully I didn't put pressure on you to get it done soon, you will get some extra points. So I want to talk about, you guys should have gotten an email from me with just an update, kind of a notification. So I've been grading those. Many of you did assignment number 8. You added home and car insurance to your plan in Bayrock and Wright Capital. So thank you for that. But what I found is there's a couple of common mistakes that you're making. So I'm just going to scroll down. When you add the auto and home, and I put a review in your I put a review in Money Study Group, so that you have a video, you have everything that I'm showing you here to help guide you in making sure that you accurately update your financial plan with your auto and home. So now that you've spent the money to purchase a home and a car, it's important if this is, and I know that for most of you, you're using an imaginary home and an imaginary car with an imaginary loan for each. And that's okay. That's how we're trying to teach you how all of these pieces fit together into a comprehensive financial plan. But as you can imagine, so I'm looking at your auto data card, not yours, but one that was completed and submitted by a student. And you can see there's several fields. Each data card in your financial plan has several fields, and some of them really matter. They matter for a few reasons. For the sake of this course and for the sake of this assignment, they matter because they tell me, these data cards, that you complete. They tell me that you're paying attention to the details and you're not just like, in fact, this student created a data card, but if you look closely, you'll see there's some missing information. So I wanted to just spend a few minutes today and review your auto and homeowners and how you add them to your policy. I want to also answer any questions you have about insurance, auto, home, life, liability. I have way more information about insurance than I could possibly share with you. I have a lot of letters after my name, mostly because I spent a lot of years in the insurance industry and I took a lot of tests. I had a lot of continuing education that required me to, take CE courses. So instead of taking CE courses, I decided early in my career I would try to get professional designations because they qualified for CE, for continuing education. And so I did that pretty aggressively for many years, and I've got lots of letters after my name, and my head is just chock full of stuff about insurance. But insurance, like I told you 2 weeks ago before spring break, insurance is an important part of any financial plan. It's a very important part of your personal finance discipline, because insurance is a way that you can transfer risk to the insurance company for a premium. That's what you pay for your insurance, is the premium, and you transfer risk. And so with something like an automobile, when you go and you buy an automobile, that is an asset and you want to protect that asset. So if you get in a wreck, that's your fault, or if you get in a wreck and it's someone else's fault and they're uninsured, you would be at risk to have that asset, that vehicle, that nice car that you have in your plan, or the real car that you've actually purchased 5-10 years from now. That vehicle, if it's destroyed and uninsured, you're out the money. So insurance is a way to transfer risk and protect your assets. So let's take a look at this auto insurance policy data card real quick. And by the way, I'm going to be looking for comments today. We've got several folks in the Zoom room, and if you're watching on YouTube or Facebook, please pretend you're here right now, and when I ask you to comment, just go ahead and leave a comment. Whether you're on Facebook or YouTube, just leave a comment and give me an answer to what I'm asking. So I'm asking you to just look at this data card. You should be able to see it. And I want you to just look at it and tell me what's missing, tell me what's wrong. I'm going to give you a couple of minutes to just give me your comments and tell me if this was your data card and your auto insurance, what's not good, or what would you change. Now remember, you did auto insurance quotes, and the reason you did that was so that you could go to your insurance company and you could ask your agent to give you a quote for a different package, a different configuration, if you will, for your insurance policy. And I really wanted you to learn in that process just how to distinguish how much each coverage costs, and more importantly, how much are you getting in terms of coverage for what you're paying. So for example, in this case, we see the three numbers that come at the very top of your insurance policy, which are your liability coverages. We talked about that a couple weeks ago. So just recall that those numbers can change. The minimum in the state, does anybody know what the minimum liability coverage is in the state of Texas? I'm not seeing any comments, but take a guess at that. What do you think? You can Google it. Christian, will you go ahead and Google that? What is the minimum liability that you're required to carry in the state of Texas? Just liability coverage. Maritza says 30,000. So if that's true, remember there are three numbers, Maritza. There's three numbers. So in this data card, you see bodily injury PP, bodily injury PA, and property damage. So when you say 30, okay, 30, 60, 30, that's good, Maritza. I'm not positive. I should know, but I'm not positive if that's the minimum. 30, Christian, you think it's 30, 60, 25? Okay, so it's somewhere in that ballpark. It changes. When I was a State Farm agent, it was a little bit lower than that. But let's say that it's 30, 60, 25, and I'll try to figure that out and maybe post it in the next update. But let's say it is 30, 60, 25, Christian. I'm assuming you Googled it. If you haven't, if somebody will give us an answer while we're here trying to figure this out. But it's a small number, okay? 30, 60, 25. And this student may have used the minimum, and if that's true, I would bet that that's what they had on their policy. And it's easy to know if you're insured, if you're on your parents' policy, if you open up the policy or your ID card, it should say right there how much coverage you have for liability. So in this case, let's talk about what those three things are: the PP, the PA, and the property damage. Do you guys, does anybody know what those three coverages are and why they're important? So PP, bodily injury, PP, what does that PP stand for? And what is the bigger number, the $60,000? The PA, what does that stand for? And the property damage of $25,000, what does that cover? These are liability coverages. They're very important for you to understand on your auto insurance what the liability coverage protects you for and what those numbers mean. They're pretty simple, pretty easy to understand. So I'm just going once, going twice. I don't see any comments in Zoom. So come on, if you're watching on YouTube, leave a comment. What are those three numbers? You've got the PP, the bodily injury, PP, bodily injury, PA, and property damage. Those three numbers are the amount of coverage that this policy has. That's the amount of protection. So I'm just going to tell you real quick, since nobody's taking any chances here today, nobody's posting any comments, I'm just going to tell you what they are. The PP, remember, was per bodily injury per occurrence, property damage per occurrence. Okay, Orlando, that's close. But bodily injury, the first two numbers are bodily injury, just like it says right here. It says bodily injury. So you've got bodily injury, PP, and PA. So that's the same, it covers the same thing, bodily injury, people who get injured in an accident. And then you've got property damage, which is $25,000. And so the $25,000 is always per occurrence, per accident. PA is per accident. It could be per occurrence, but it's per accident. So what we have here is this person has bodily injury per person of 30,000. So remember, I gave you an example of an accident that you caused, and you were driving and texting, and you created an accident with a school bus, and there were several kids on board. I think there were 10. And we said that all 10 of them went to the hospital, as I recall. I'm making this up again because I don't really recall. But in this accident that you caused with a school bus, all 10 students on the school bus, including the driver, went to the hospital, and they all had injuries. Let's say they all had injuries that equaled $30,000. So per person, no person, and let's say that one of them had injuries that were like $250,000. Let's say that the driver, in his attempt to avoid the accident, really injured himself, and he had $250,000 of damages, including disability, including medical surgery, this and that. So that's bodily injury. The most your policy is going to pay is the limit. PP means per person. So even though the driver of the school bus had serious injuries and expensive medical bills, including some disability, that's all going to be covered under this personal per person limit. So how much will the driver of the school bus be able to receive from your policy? The answer is the most they would receive is $30,000. But here's the kicker. Because we have the PA per accident limit of $60,000, and we have 10 students that had injuries and medical bills equaling $30,000 each, and then the bus driver with $250,000, that's a lot. It's way over $60,000. So the most this insurance policy is going to pay out for everybody, including the driver and all 10 students who were injured for bodily injury, the most this policy is going to pay is $60,000. Now, it's going to be a headache for the insurance adjuster, which is what I used to do for a living. It will be a serious headache for the insurance adjuster to try to figure out how do we divvy up that $60,000 in the case that I just described to you, in the accident I just described to you. And it's not very easy to do, but I promise you the insurance company is going to pay that limit out pretty quickly as they possibly can, because once they pay the policy limit, they're going to say to you that you're on your own. You can get your own attorney. You can show up in court, and it's between you and the defendant at this point. After the insurance company pays their limit, you're on your own. And so they will defend you. They'll pay the defense cost as well. But once they pay policy limits, they're pretty much done. So then we get to the property damage, and that's how much we would pay for the school bus. And remember, in my scenario, the school bus rolled, it hit a pole, the pole broke, fell into a house or a business or something. It caused a lot of damage. So the whole point here is I want you to know how much would it cost to take your policy from the minimum to something much that gives you much better protection. And that may not be too important for you today. Maybe because you don't have assets, all you have is debt, and the bank basically the bank owns your car because you have a loan. They own your house because you have a mortgage, and so they're going to require that you carry insurance. And what I want you to do is start to think about how do you get the best bang for your buck in your insurance. And so that's where we talk about a deductible. So in this case, we see a deductible of 0. We see a couple other things that I want to highlight. And these are things I want you to know, because even though you may not have received a deduction in this week's assignment, when I graded your assignment, if I saw this data card, I didn't give you deductions this week. If you turn it in late, I may give you deductions. Like, not late, but if you turn it in on time, which is next Tuesday, because we're doing this review this Tuesday. This is Tuesday, 21 March, year of our Lord, 2023. This assignment is going to be due Tuesday, 28 March, year of our Lord, 2023. So my point is, those of you who did this assignment and turned it in, I didn't give you any deductions. But now that we're doing this review, and since I sent you that email and I posted this in Money Study Group, I will probably give you a deduction if you turn in a data card that looks like this. And then when you email me to complain, I will ask the question, did you happen to watch our Zoom meeting? And if you didn't, I will say, let's do that before you ask me the question why I gave you deductions and said go back and watch the Zoom meeting. So a couple of things here. I'm going to give you a chance to tell me, what do we see that's wrong here? There are 3 things that I'm looking at, 4 things that I'm looking at that just come out that would create a deduction, not only in your assignment. So remember, as you do these assignments, as you update your financial plan, you have the weekly assignment, and sometimes I give you a deduction if you miss something, like is missing on this card. And then what happens is you have a chance to correct that. If you don't make those corrections, then by the time you do your capstone assignment is where we put it all together. And basically you create a printout using screenshots of your data cards. You create basically a comprehensive financial plan where you show me, here's what I did with my car insurance, here's what I did with my home insurance, here's what I did with my mortgage data card, and here's how I set up my retirements, my retirement, my investments. And you're going to do all that in the weeks ahead. So you're going to want to just pay attention. And when I do these reviews, they're to help you get full points, but they're really to help you learn. So do you know what a deductible is? Do you know how it affects your insurance? When you got your insurance quote, that was a big part of that assignment. And I asked you to go ahead and get some quotes for different amounts of deductibles. A deductible, remember, is what the risk that you retain. So the whole point of insurance is to transfer risk to the insurance company. But when you select a large deductible, you're saying, I'm not going to transfer. If you have $1,000 deductible, you're not going to transfer that $1,000 risk to the insurance company. You're going to retain $1,000 of risk, and in exchange for that, the insurance company is going to lower your premium. So right now we don't see what the premium is because this student didn't include the premium, which means they probably didn't do the assignment and get a quote, or they just didn't think about actually adding the premium here. But the premium is important because when you add the premium on this data card, it actually goes into your cash flows in your financial plan. All of these data cards do that. That's why I want you to pay attention to these fields. And the deductible is 0. That's obviously not correct. You can get deductibles of 0, but it is very expensive. And I don't even think you can in Texas. I know State Farm does not offer auto insurance with a 0 deductible. So a couple of things here. The policy name, you might want to put the name of the vehicle that you're talking about, that you're paying the premium on. So if you bought the Lexus or the Tesla, put Tesla, whatever the model number is there. That's just a suggestion. You wouldn't get a deduction for that. It's just a suggestion. But you would get a deduction for this. If you don't have comprehensive, if you don't have collision coverage checked, you see those are not checked, and what that means is you don't have protection, you don't have those coverages, and that means then you wouldn't have a deductible because you have no coverage. But you need to have collision and comprehensive because you have a car loan. We set this course and your financial plan in such a way that you actually go out and you buy a car using a loan, and that loan, the bank who owns that loan would require you in real life to have insurance, and that includes comprehensive and collision coverage. So let me talk quickly about the difference between comp and collision. So if you have collision coverage, that's going to cover you if you get in a collision with anything. If you get in a collision with another car, with a tree, with a building, with a school bus, you're going to be covered. Your policy is going to pay for damage to your car under collision coverage. If you get in an accident with someone else, it's your fault, they're injured, their car is destroyed, that's when liability is going to cover you. It's going to cover the other person, but your policy will respond to any damages caused by you because of you and your negligence. So that's liability. But when you get in an accident that is your fault and your car is damaged, that's when you get collision coverage, and you're going to need it, you're going to want it. So let's talk about comprehensive just quickly. Do you guys know what comprehensive coverage covers? Go ahead and leave a comment here. This is important. I'm going to take a sip of my coffee while I wait for someone to answer the question, what is comprehensive? What does it mean? What is the coverage? What does the word comprehensive mean? And then we'll unpack what the coverage means, or it covers. We'll talk about what the coverage covers. But comprehensive, you could Google that word if you want. I'm going to have a sip of coffee. That's good coffee. Okay, so I have no comments. No comments. Hello, if you're there, leave a comment. What is comprehensive? Okay, I've got, let's see, who do we have here? I'm going to start picking on people. Julietta, are you there? Are you listening? What do you think the term comprehensive means? Raj, what do you think? Sadaf, Elizabeth, Christian, Maritza, Orlando. I'm calling you guys out. Let's see who else. Everyone. What do you think comprehensive means? Leave a comment in the chat box, please. Okay. If you're watching on Facebook or YouTube, now's your chance. Leave a comment. What does the word comprehensive mean? That's what I want you to think about for a minute. Comprehensive. What does it mean? Christian says comprehensive car insurance protects your car from... I got some more comments, so that's going up. From unexpected damage such as tree damage. That's true. That's true. So what does comprehensive mean, Christian? What does the word comprehensive mean? Maritza says, any damage to your vehicle not caused by a collision. That's a really good answer. That's the best one yet. Vivian says, something that's out of your control. That's not really what comprehensive means at all. Yeah, Christian says all-encompassing. Bingo. Comprehensive is everything. Think about that. You have a coverage on your car insurance that covers everything. Like, who was it? Vivian, I think, said. Vivian, nope, not something out of your control, Vivian. That was not correct. Someone said, yeah, not caused by a collision. So Maritza, you probably read that in your policy. If you read the insuring agreement for comprehensive, it will tell you that it doesn't cover collision. So obviously, well, maybe not so obviously, but for sure, if you think about it, if you are the insurance company, you want the insured, the person paying the premium, to pay to have coverage for their own vehicle if they collide with something. And so if you're going to offer a coverage called comprehensive that covers everything, obviously it's going to have some exclusions. And obviously in the insuring agreement, it's not going to include collision. That's a separate coverage. So if you have collision insurance, if you have collision coverage on your insurance policy, but you don't have, if you have comprehensive, let me say that again. If you have comprehensive coverage on your insurance policy, but you don't have collision, and most insurance companies won't even sell it that way, in that case, you will not be covered if you run into a tree. Now, if the tree falls on your car in a windstorm, your comprehensive coverage would protect you. Your car would be paid for. So let's talk about that for a minute. Comprehensive coverage is very broad, very broad. It covers everything. This is, in fact, probably my favorite coverage on any insurance policy. So I'm going to talk about it for a minute. Comprehensive is everything. So I wasn't driving, I was actually a passenger. My friend Vinny was driving his new Suburban, Chevy Suburban. And this was back in 1989. I was moving to Houston from Austin so that I could go to work for State Farm Insurance. In fact, I'd already started working for State Farm Insurance, but I came to Houston a couple months before my family came. And so on this particular day in 1980, it may have been 1990, because I started with State Farm in 1989 in November. So this was probably February of 1990. We're in his Suburban, a brand new red, beautiful Suburban, and we're doing about 70 miles an hour down the road. And we had just stopped because my son Brandon he needed to use the bathroom pretty bad. And when we stopped, we got a big gulp. And I don't know if you know what a big gulp is, but if you go to Circle K or a lot of places, they have a big gulp. It's a big drink. And Vinny got himself a big gulp, and he had it sitting there in the console, driving down the highway in his brand new Suburban. And my two sons were in the car with me, and we had the Suburban packed with stuff in a trailer, and we're moving to Houston, and we're doing like 70 miles an hour. And Big Vinny reaches down to grab his big gulp, and when he does, he bumps the shifter. It's on the console, and he bumps it into reverse. Now, what do you think happens if you're doing 70 miles an hour and your Suburban goes from drive into neutral and then right into reverse that fast? What do you think happens to your transmission? You can take a wild guess and just imagine a little bit of smoke, a funny sound, clunky clunk, and then maybe your vehicle isn't going to work after that, which is exactly what happened with Big Vinny's Suburban. So we had to get it. We had to get it towed. He got it to the dealer. The dealer gave him a quote of $2,500 for his transmission, and at that time I was a master mechanic. Before I went to work for State Farm as a claims adjuster, I was a mechanic. That's how I paid for college. So Vinny calls me up. He says, "What do you think?" They want 25 grand, not 25 grand, 2,500 to replace the transmission in my Suburban. I'm like, that's a lot of money. And then I asked Big Vinny was a claims superintendent at State Farm. He was like, he did mostly liability claims, but he was like a boss. And he was my friend. We camped together. He's the guy that got me to come on board with State Farm. So we spent a lot of time together, and he was way up in State Farm, and I was just brand new going to claims school. But during claims school, I learned this thing about an insuring agreement. And I learned when your insurance policy says comprehensive, it means comprehensive. And the only thing that's not covered is if it's excluded, like Maritza said, if it's not caused by collision, obviously, then it's not covered by comprehensive because it says so in the insuring agreement. And then there are some exclusions like rust and rot, anything that doesn't happen suddenly and accidentally would be covered. But if it happens over time, that's not covered. So that would be an exclusion. And nuclear war would be an exclusion. Acts of God, not an exclusion. People say that all the time, but it's not true. So here's my point. I say to Big Vinny, that's a lot of money for the transmission, but have you called your insurance agent and filed a claim? And he was like, "What? What are you talking about? That's not covered." He laughed at me. I said, "Hey man, think about it. It's comprehensive coverage," and he knew insurance better than I did, but I knew this. The insuring agreement said it covers everything, comprehensive. It only doesn't cover things that are excluded. And I asked him, I said, "Hey, Big Vinny, is there an exclusion in your policy that says you're reaching for your big gulp and you bump it into reverse doing 70 miles an hour while you're going down the road?" He thought about it for a minute. He said, "You know what? It might be worth a try." So Big Vinny files a claim, and they paid the full amount. And at the time, he had a $50 deductible on his comprehensive coverage. So I love comprehensive. One more quick story. When Hurricane Andrew hit, I worked for State Farm, and I was a claims adjuster, fire claims adjuster, which means I handled claims for homeowners insurance. But while I was gone, this is another story about comprehensive coverage and why it's my favorite coverage on any policy. I was living in Key Largo, for a few months working Hurricane Andrew claims away from home. My wife took our sons to play baseball on a Saturday morning, and they're in the car on their way to go play baseball, and they stop at a donut shop to have donuts. At the time, we had a nice little red Caravan, minivan, and so when my wife came out from the donut shop to go to the baseball game, it wouldn't start. So this very kind man who was next to her in a truck, a welding truck, he offered to give her a jump. She was so thankful. And so he put his cables onto her battery. But the problem was he had like 220 volts in his welding truck. And obviously, being a minivan, it was a 12-volt system. So when you introduce 220 volts to a 12-volt system, something's going to fry, which is exactly what happened. Smoke started coming out from under the dash and every place else you can imagine where there were wires. It fried the wiring harness. It burnt several components and elements in the entire vehicle. And the gentleman immediately said, "Have a good day," and he left. And my wife did what I think most wives would do. She called me. I think that was the right thing to do since I was an insurance professional at the time. And she's like, "What do we do?" And I said, "Hey, no problem." Because I knew that comprehensive coverage absolutely would cover this loss. And we had rental coverage on our car. I don't know if you guys did rental coverage when you did your quote, but rental coverage is very helpful because when you have a vehicle damaged by a covered loss, your insurance policy will pay for you to rent another vehicle. So you don't want to cut corners on the rental coverage. You can get the minimum, or you can get the medium, or you can get the best. And so I generally, rental cars are expensive. So I carry rental coverage to this day, and I did then. And I told my wife, just don't worry about it. You're going to rent a car. The vehicle's going to go to the shop. It's going to be fixed, and the insurance company's going to pay for it. And she was so relieved. And it was all true. All of that happened. We rented a vehicle for a long time, got to drive a new rental vehicle for a long time, and then it got fixed at the dealership, and the insurance company paid every penny of it. So that's comprehensive, and that's why I want you to have these checked. Not just in your financial plan, not just for this course, but I want you to think about the benefits of these coverages and understand them. And so that's auto insurance. If you have any questions so far about what you need to have on your auto insurance data card, now's a great time to ask. So let me jump into home insurance. It's not that different, but one of the things I want to make sure you do is make sure you have clicked on primary home. I'm not going to go into your financial plan right now, but when you set up your mortgage, you obviously had to say whether or not you were renting. We covered that several weeks ago. But when you put the property in, so you put the property in, and that's where you create a data card for the property, and now you're doing a data card for the insurance. And when you click on this, it's just a little drop down, and that should be your primary home. Also, if you're missing the annual premium, I didn't tell you, you didn't have to do a quote for home insurance, but I did ask you to do a little review. And I wanted you to know, I want you to know how to figure out a basic amount for insurance for your home. So I'll just tell you, this would receive some deductions. So when you do policy name, I would put the address or the street, whatever, primary home, something. Don't just leave it blank. And the owner is either going to be you. If you have if you have another person in your family, it could be jointly owned, but that's not a bad idea. Yes, it's included in your plan. And so what I want you to look at here is the coverage amount. So what kind of home do you think you could purchase and insure for $3,689? There's no such thing. And so that's an incorrect number. And I don't pay close attention. I just know when you purchased your home, you had a mortgage. And so you need to have at least as much insurance as your mortgage, because again, your mortgage company is going to require that you carry sufficient insurance. Uh-oh, sorry about that. I had a phone call. And my phone is being used as my camera right now, so sorry about that. Your mortgage company is going to require that you carry enough insurance on your home so that they get paid if your home gets destroyed in a fire or a hurricane. So they're going to require you to have insurance, and they're going to require you to have at least as much insurance as you have on the mortgage. So if you have a mortgage in your financial plan of $272,000, I would just use that number right here for the coverage amount. And then all you have to do is like kind of Google and maybe get an online calculator or ask someone who knows what it would cost. If you're already getting quotes for your car insurance, you could ask your insurance agent that as well. But I'll tell you, I'm not paying that close of attention to the premium. I know that if you have a $250,000 house and you're in Galveston County, you know, my house is probably $300,000 and I pay about $4,000 a year for insurance. So you've got to you just do a little research, or at least take an educated guess. But if you said you had a $3,000 house and you're paying $1,400, I'm going to give you a 20-point deduction. Maybe not 20, but at least 10. And remember, not only am I going to give you a deduction on the weekly assignment, if you don't fix it by the time you do your capstone, you're going to get another deduction. So don't do that. That's why we're doing this review. So that's kind of the auto and home. And there is a video in this post where I show you the planning components, and I show you basically what I'm showing you now, and I walk you through it. So, but you don't get the stories. You don't get the stories about the comprehensive insurance, which is my favorite coverage of all. Okay, I'm gonna see if we have any questions. Wouldn't let you edit the annual premium. So Vivian, what you want to do, if you could do it now, that'd be great, is go into your mortgage data card. So go to Profile and go over to Loans, and when you see your loan there for your mortgage, click on that, and that's where you put your insurance in. Would you try that now and just let me know if it works? I am going to come over here and see if I can do it. While you're doing it. Yes, I'll try. So you try and I'll try, and we'll see if we can figure this out. But I'm pretty sure that's how that's going to work. I'm logging in now. If it will let me log in, I'll go to Billy's plan and see if I'm right. So I am now in Billy's plan, as you can see, and I'm going to go over here to Profile, and I'm going to run down to Loan, and I'm going to go onto his mortgage, and it is not there. Is it not there? Monthly payment. I was thinking that's where it was, but maybe it's in property. Yeah, it's in property. So my bad. It's not in the mortgage. It's actually in the property data card. So here's his primary home. This is where he can rent or own. So I lied to you twice. In your mortgage data card, that's not where you tell your plan that you own. You tell it whether it's primary home. You're going to link to that. So it's the property card. So we've got the property card. So for your homeowner's insurance, you have 3 data cards. One is the actual property. That's where you tell the computer, here is the property that I have in my plan. And that's what Billy has here, is his property data card for his home. And I would, kind of maybe take a screenshot of this, because this is a correctly done home data card. And again, this is one of 3 data cards. I'm going to review them real quick for you, but in this case, he owns it. It's not rented. If it's rented, it's not going to go into your financial plan the way you want it to. So make sure you're owning. This data card, he's got primary home. That's fine. Already started. Make sure you have it already started. And he does have annual property tax. Now, we haven't really talked about that, but you really need to do a little research. If you're going to buy a house, one of the first questions you're going to ask is, what are the taxes on this property? And so as a student of personal finance, it's something you should think about and do a little research. And, like I said, I don't pay close attention to see if it's really accurate, but if you've got $500 for annual property tax, you will get a deduction if you're in Houston and you have a house for $375,000. I pay about 10 grand a year. If you've got $250,000 or more in a house in Houston, you're going to pay at least, very likely, 10 grand. And then the annual insurance, that's where that number is, Vivian, is under the property data card. So let me quickly just review. So we've got 3 data cards related to your home. One is the actual property. That's where you said, okay, I bought this house. Here's the numbers on the house, and this is the property that I own. And then we have the loan, the home mortgage, and that's right there, and that's under loans. And that's where we have the interest rate, the monthly payment, and those things flow right into your plan, into your cash flow. So it's important that you get them, that you think about what they are. Again, if I'm your financial planner, if I'm your financial planner and we're sitting down to do a financial planning review, it's one of the things I want to look at. And if you don't know, if you're my client, I'm like, well, let's find out. Let's get the information and find out, what is your interest rate? What's your monthly payment? What's your minimum? How much did you pay originally for this house? And what year did you buy it? How many year term loan do you have? What's the minimum payment, and so on? And who owns it? Is it Billy, Sally, or is it joint? How is it titled? That's important for other reasons beyond the scope of this course, but I want you to pay attention to every one of these fields and think about them. And if you don't know the answer, then maybe reach out to GroupMe and say, hey, what do you think about, what do we put in this field, if you can't figure it out on your own? Or call a friend, or, if you can't get an answer, you're welcome to text me, but don't do that first. Do that after you go to GroupMe, please. So 3 data cards for your home. One is the mortgage. We're looking at that now. One is the property data card. We looked at that a minute ago. And the next one would be the insurance. So in this case, does Billy have, he's got homeowner's insurance. Is it correct? Oh, it's not, that one's not correct. Let's see if this one's correct. No, it's not. So the premium you see, though, is already there because we got that from the property data card. And this coverage amount needs to be, what did we say? We'll say 400 grand. If we can do 400, 1, 2, 3, hit save. He's got 2 data cards for some reason. If you have 2 of those, that one's correct. Oh, actually, here's what we did. We did 1402 Sunset. That's my address. So I'm going to delete that one, and I'm going to delete that one, and Billy should be good to go now. So he's got 3 data cards for his home. One is the actual property data card. One is the mortgage, and one is the insurance. And this week's assignment for you is to make sure you add that insurance data card to your plan. So you've done you did the mortgage and the property earlier. But again, just so you know, each one of these data cards that we're reviewing, they become part of your financial plan. They become part of your capstone assignment, which is worth 200 points. So if you get a deduction here and there on your weekly assignment, that's not a super big deal, especially if you're turning your assignments in early and taking advantage of that extra early bird point system where you get 20% extra points for turning it in early by Friday at 3 p.m. So please do that. Okay. Any questions? Vivian, were you able to figure that out? I think I'm confident you can do it because I just showed you how. But yes, thank you. You're welcome. Okay, yes, thank you, Maritza. That was a great answer. Hey, are you guys doing anything in the group me? Like, are you answering any questions? It seems like it's going well. If you're watching on YouTube or Facebook, put a comment in. Just let me know how's it going in group me, because I'm getting very few questions, which is, I really like that. It makes me feel like you guys are that I'm giving you enough information and that you are helping one another along the way without having to ask me questions that hopefully we've covered well in the Zoom meetings and the lectures and in the lessons that you have in Money Study Group. Hopefully that's working as well as I think. But if you leave a comment and tell me how's it going in group me, in fact, you can use that this week for your class collaboration. I'm not sure what we have this week for class collaboration, but I'll make sure that it gets in the Blackboard assignment when I post assignment number 9. So let me just give you a quick overview of assignment number 9. This is the investment. We're going to move right into investments next week, so I wanted to spend plenty of time helping you with the insurance today, but we're going to jump right into investments next week, and I'm going to teach you 4 investment strategies that are specifically designed to help you maximize return while you minimize risk. And if you've been watching the stock market at all, you've probably seen that the market's been very volatile, and so I want to teach you how to invest in a way that's pretty fearless so that you have the confidence you need to continue to invest over the long term and actually build wealth. I can teach you that. I promise you, if you pay attention in the next week or two, you're going to learn the 4 investment strategies that will help you do that. So the 4 investment strategies, I'm just going to name them right quick. And these again they're very common. These are not newfangled. They're not even that innovative. They've been around for a very long time. They're basic fundamental strategies, but they're very, very important. The first one is diversification. I'll tell you the story about Enron. If you don't know the story of Enron, you will want to think about diversification in the context of Enron. We'll talk about that next week. And number 2, the second investment strategy designed to help you maximize returns and minimize risk is asset allocation. There's no more important investment strategy in terms of the outcome or performance of your portfolio than asset allocation. It's the number 1 determinant. Asset allocation, as far as an investment strategy, it's the number 1 determinant of your portfolio's returns over time. So I'll teach you about that. But in order for me to teach you about that, you're going to have to do some homework. And in assignment number 9, you're going to do a lot of reading and homework just to get familiar with different asset classes and asset types, because you can't really understand the power and the benefit of asset classes if you don't know the difference between a large cap stock and a small cap stock, or a U.S. large cap stock versus an international small cap stock. There's a different risk profile for each of those investments, and that is what makes asset allocation such a powerful strategy. So I want to teach you that, but I need you to learn a little bit about asset classes. So you're going to read about asset classes and asset types, as well as investment types, and we're going to go over that, and I'll talk about it next week, the week after, and the week after that. So investing is typically the number 1 most popular topic in this course, and we're now entering into investments starting next week. So the third investment strategy that you're going to want to understand, that is, in my opinion, the most powerful investment strategy for younger people like yourself who have a long time to invest. The strategy is called dollar cost averaging, and I'm going to tell you a story about Farmer Joe, and decided to buy cows. And that story about Farmer Joe buying cows for his farm when the price of cows was going up and down like crazy, that story is going to help you understand the power of dollar cost averaging as an investment strategy. Again, all 4 of these strategies are designed to help you maximize returns and minimize risk, and they work. They work super well for young people who have a long time to invest. So you're going to learn how to invest in a fearless way, not being afraid of market volatility and ups and downs in markets. You're going to learn why investing with these strategies is really for you and how it can help you build wealth over time. The last one, the 4th one, is portfolio rebalancing. And if you think about, you're going to have to first learn how do you allocate assets in your portfolio. I'll just give you a clue. If you were going to do a simple basic asset allocation, you would do 25% into large cap stocks, US stocks, 25%. 25% would go into US small cap stocks. That's 25%. And 25% could go into US bonds, and that would be 75% of your portfolio, leaving 25%, which you could put into international bonds and stocks and just the global market. So that's a simple 25, 25, 25, 25 portfolio. And you could do it differently, but just for an example, that's a pie with 4 pieces. But over time, one of those asset classes is going to outperform the others, and one of them is going to underperform. So when you rebalance your portfolio, you just sell off, take profit from the sector or the asset class that really grew. You sell it, take your profit, and put that profit into the asset class that got hammered. So basically, you're buying low and selling high in a systematic way over time. Portfolio rebalancing helps you to build wealth, and it's another strategy designed to help you maximize returns and minimize risk. So those are the 4 strategies I'm going to teach you next week. But in the meantime, and over time, you've got to learn some other things about investing if you want to really understand the benefit of these 4 investment strategies. And if you really want to become a fearless investor, which is what I want you to become, I want you to not be afraid of risk, because I want you to know that you're using the right strategies to manage risk in your investments. And that's what I'm going to teach you over the next couple of weeks. So again, this post is at Missional Money, and it's there for you just to review. It's actually not a review, it's a preview. So that's there. And I will post that assignment in Blackboard later today. But you have until next week to do assignment number 8. And you will get extra points if you do it by Friday at 3 p.m. So I'm going to see if we have any questions. I see no questions, and that means I've done my job. But if you have a question, please leave a question. It is 10:58 a.m. I'm about to end the course or the lecture. But before I do, I'm going to go ahead and end the live broadcast. So if you've been watching on Facebook or YouTube, thank you. It's been a pleasure. I'll see you next time, same place, 10 a.m. on Tuesday. I'm going to hit finish and end the broadcast now.